Hi, my name is Adam Creed. I'm a sales director here at Canada Life Asset Management, and I'm here today with Steve Matthews, fund manager of the LF Canada Life Sterling Liquidity Fund. Steve, cash has been a difficult place to be over the last 10 years with very low interest rates. However, given the sharp move we've seen, how is it now playing a role in client portfolios?
I think cash has always held an important role because you need to have it there as a guard against potential losses in whatever markets you could be invested in. So it's played an important part as a stopgap, but now I think it's moving into a world of its own where it's an actual asset class that can be held for yield purposes.
So it's giving you a 4% plus yield now, roughly.
Yes.
But it also gives you much more capital stability and liquidity than other asset classes, because some people might ask, well, why did I put that in gilts? What is the difference between a money market fund, for example, and other defensive asset classes like UK gilt?
That's right. It's a very stable fund to invest in because it's holding very short-term, very high-quality assets. It holds those assets to benefit from how the interest rate environment changes. So we will invest particularly short where we think that interest rates are going up, and then the fund can react and be reinvested into the new levels very quickly. Whereas if you're holding a gilt, it will reflect the market's view of how interest rates will change over a period of time, and the price can move more rapidly. So in September, when we had the LDI issues within the market, the 2-year gilt fell from 97p to 89p, which is a tremendous loss of capital in one quick movement. It's recovered some of it to 93p now, but in that time, the Sterling Liquidity Fund just kept chugging along, moving along at a nice steady pace, accruing interest, accruing yield for investors.
So obviously you've talked about the 2-year gilt there as an example of an asset class. What are the kind of asset classes used in the Sterling Liquidity Fund? Do you use gilt, for example, or is it other types of fixed income instruments or deposits?
We do. We look at every asset class on a day-to-day basis to see what its relative value is. So some assets are priced off of gilts, some assets are priced off of SONIA, which is relative to the Bank of England base rate. The assets that are priced off gilts are more volatile. They move in line with market news. So when we had the Silicon Valley blowout a couple of weeks back, the interest rate on the gilts fell sharply as the market took into its thoughts how the Bank of England would react, how central banks would react, and how the banking market, how the banks themselves and the regulators would respond to SVB. In that time, SONIA stayed stable because that's where the Bank of England base rate was, and the assets pricing off SONIA suddenly became more valuable than assets priced off of the gilt. So we can switch from commercial paper, floating rate notes, certificates of deposits to obtain better returns, to gilts and to bonds priced off of gilt prices, as and when they vary. Sometimes we have opportunities to buy bonds at elevated levels because the bond market prices differently to the short-dated commercial paper and CD market. And today, for instance, we bought a AA- rated 9-month bond at 5.35%, where the same bank is issuing commercial paper today at 4.85%. So we've picked up 50 basis points for no additional risk and something that's far more tradable than commercial paper.
Thank you, Stephen. I think you've given an example there which perfectly illustrates how cash is actually a very diversified asset class with lots of different investment opportunities that investors can take advantage of within a money market fund. Thank you for your time.
Pleasure.